Hi, this is James Shug with Westpac London's end of day report for Monday, the 19th of December. Well, equity market sentiment in Europe started off negatively. We had, of course, over the weekend, the ratings agencies making various unfavourable assessments of European sovereigns, with Fitch, for example, likely to announce by the end of January a range of downgrades for various European governments. That, along with the North Korean leader's demise and the uncertainty that might create, certainly meant that equity markets were a little bit nervous at the open, but they tended to move into positive territory in the London morning. At 3:30 London time, EU finance ministers were having a teleconference to discuss the final details around the 200 billion contribution they want to make to the IMF, which would then be used for support for the European sovereigns encountering difficulties. And also that teleconference was designed to finalise the tightening up of the fiscal rules governing Europe and Eurozone members going forward. However, as the afternoon dragged on, we hadn't heard anything out of that meeting. I mean, after all, a lot of different languages being spoken, a lot of interpretation got to go on. It's going to take some time, I suspect, before we actually see something emerge. And already I think there's speculation that maybe nothing concrete will come through. So equity markets lost their gains in the afternoon. A little bit of support to the market came from a better than expected home builder confidence reading for the month of December out of the US. Home builder confidence there on the NAHB measure rose to its highest since the tax credit for home buyers was in place in the second quarter of 2010. So there has been a bit of an uptrend in that measure of the housing market, whether it's just a temporary phenomenon related to lower mortgage rates or the beginning of a more sustained upswing remains to be seen. But as I say, that was the only major piece of economic data today. So that's where we're at. Still waiting to hear from EU finance ministers. That, along with concerns about new regulatory requirements regarding banks, particularly in Europe, and the impact that will have on their lending ability at a time when the economy is going into recession, has meant that sentiment has turned pretty sour. And in equity markets at the moment, at the close in Europe, the FTSE was down 0.4%. The French market up just 0.06%, and the German market down 0.5%. In the US, the Dow's down around 0.4% at the moment. We're looking at 11,814 there. In terms of commodity markets, a mixed bag today, but the ones most relevant to Australia had a negative bias, with oil down 0.2% at $93.36 a barrel. Gold prices are down 0.4%, $1,592 an ounce, and copper prices are down 1.4% today. The Aussie dollar is at 99.2 US cents today. It's traded at a 99 to 99.8 cent range, so it's at the lower end of that range as I'm speaking to you now. On that, the Reserve Bank of Australia releases the minutes to its December board meeting today, Sydney time, Australia time, and that of course was the meeting where interest rates were cut back to back, actually, following the November rate cut, and where there was mention in the statement of the Reserve Bank's concern about the lack of progress that European policymakers were making with regards to the sovereign debt crisis. So it'll be interesting to see in the minutes there what further commentary there might be, particularly about the international environment. Okay, I'll leave it there for now. Back tomorrow.